I remember in one of my videos, I did mention of two mentors which I had when I just started in Forex trading. And one of these mentors was Sean. Sean was from Apparel Fund. So Sean taught me how to trade from A to Z. And another thing was, even after they taught me on how to trade, it took me almost about 2 years. My skills were exceptional, and they gave me $200,000 to trade. That was back then, $200,000, meaning it was raw cash, raw $200,000. Another mentor that I hold of high esteem is also Aton Crowe. So Aton Crowe was also from the Institute of Forex Trading. If you guys must have known this guy, he was a Goldman Sachs Forex trader, you can imagine. So he was trading for the Goldman Sachs, and after that he formed his own trading institution where he could show retail traders what to do the right way. So those were the two mentors which I had when I was just starting Forex trading, or the two mentors that helped to smoothen my curve and to put me on the right path when it comes to Forex trading. And I always like to quote most, or to recite, or to give a lot of citation and a lot of recommendation to what Aton Crowe taught me. And one thing he also taught me in one of his videos is a concept which I want to share with you guys. So I'm just going to pause the video for just about a minute, play that part from his video, from one of his seminar, so that you can hear that particular part. And after that, I'm going to be able to tell you how crucial that particular concept he's going to be mentioning is, and how that concept was able to catapult me to the millionaire Forex trader I am today. So just watch this small clip.
From now to over the next 250 trading days. And every day you buy it at 106 and sell it at 106. What happens? Can you make money? Well, of course not. So this idiot is going to be sitting at his desk for the next 250 days saying, I am a Forex day trader, can the Institute help me? What mistake has that person made? They've limited their opportunities because they're only trading one asset class, one time horizon, and they don't have any ability to trade anything else over any time horizon. That's the first error everyone makes in retail trading. What you have to do in your first 1 to 2 years as a retail trader is to learn how to trade everything and get yourself a proper educational foundation so you can follow the volatility or predict where it is and go where the money is. So if you're over one time horizon in one asset class and it stops working, you can shift and move. You don't define yourself by one asset class over one time horizon.
Perfect. So I hope you guys have been able to hear from my mentor himself. You guys have been able to hear from the legend himself. This guy made more than 50 million trading with Goldman Sachs. That's one of the biggest banks on earth, and I was fortunate to have him as one of my mentor. So just from what he said, can someone already deduce a very common concept in the industry which people even have some mentor that will be able to teach you otherwise? Can someone already deduce from that? Just from what he said, I would like you to be able to try to deduce what he's trying to talk about, the most common concept in the Forex industry or in the retail Forex space, which he's trying to talk about. All right. So that concept is the concept of trading multiple currency pairs or sticking with one currency pair. That's what he's saying. As simple as that. Should you trade with multiple currency pairs or stick with one currency pair? And his answer is simple. You can see he's telling you plain and simple. Don't be so stupid like those other people out there that will just focus their attention on one currency pair or will just focus their attention on one asset, because the market changed like the wind. The market volatility changed like the wind. You need to be able to follow where the money is. That is the same thing I used to preach on my channel. That is the same thing I used to advise you guys every day. Stop following these gurus, stop following these kids on the internet, these people telling you to stick on just one currency pair. I only trade maybe the euro pairs. Maybe I only trade the Great Britain pound pairs. I only trade euro USD. I only trade Great Britain pound. That's bullshit, bro. That's bullshit. Because the answer is simple. I have tried. Before I came in contact with this guy, I used to try. I used to follow all this advice. I'll stick on just one currency pair, and some days I'll open my chart, I'll open my computer, and even when there is no opportunity for me to trade, I'll still be trying to squeeze an opportunity out of that particular currency pair because I didn't diversify my portfolio. I didn't diversify my asset. You're not going to have opportunities on that particular asset every day. There are some days you're going to open your chart and the market is going to be quiet. There's going to be low volatility. There's going to be low liquidity. And when there's low liquidity and you're trying to trade, trust me, you're going to blow your account. So what do? You follow where the money is. And where is what is he talking about when he talks about following where the money is? You follow where the liquidity is. You only make money in Forex trading where the liquidity goes. That is where the money goes. That is why the Forex market is the biggest market in the whole world, because the Forex market is the most liquid market. It's simple. You don't it's like putting all your eggs in one basket. If that basket has to break, you won't have anything to do. You won't have any other asset to trade. You've limited yourself to just one time frame. You've limited yourself to just one currency pair. You've limited yourself to just one asset. Limiting yourself to just one time frame. Maybe someone say, no, I only trade the 5-minute time frame. I only trade the daily time frame. That's why, as you guys already know me. I take his advice to heart because I'm any kind of trader you can think of. I'm a day trader, I'm a swing trader, I'm a position trader, I'm a scalper. It just depends on the time availability I have and the opportunities I'm seeing on my end. It just depends on the opportunities that are presented to me. If today I open my chart and let's just say there's NFP, I'm just going to know that, okay, today I'm going to be scalping. I'm going to automatically know that, okay, today I'm going to be trading on a lower time frame. I'm going to be trading on the 5-minute time frame. It's automatic. I don't need anyone to tell me that only focus on the 5-minute time frame. And if I come to the market tomorrow and there are key levels I'm watching, and the market gets to those key levels, I'll be able to know that, okay, these are swing, these are positions, these are day trading positions. I should be able to use my day trading strategies. Maybe this trade is going to be open from hours up to days. And if I'm traveling, like most of the time I used to be on a world tour, let's just say I'm traveling from country to country, it's automatic. I already know that, okay, now I need to only take swing positions. I'll be able to open my chart, do my analysis, only take swing trades, and maybe when I'm traveling from country to country, the money is still printing. What does that tell you? I know the importance of not putting my eggs in one basket. I know the importance of following the money where the money is going. Everything in the Forex market changes every day. Something that was working yesterday, there is no guarantee that same thing is going to be working tomorrow. The same strategies you are using on your so-called Great Britain Pound JPY or your Euro USD or your gold, or so, there is no guarantee that same strategy is going to be working tomorrow. Tomorrow, the strategy that is going to be working is going to be working on maybe CAD JPY. It's going to be working on maybe USD CAD. It's going to be working on maybe Nasdaq. Even coming to asset, you guys already know. I trade commodities. I trade gold. I trade Forex. You see me trading Great Britain Pound USD, Euro USD, this. And I also trade indices. You also see me trading Nasdaq, trading US 30, trading German 30, trading US 100. That is the importance of what? Of diversifying my portfolio through different assets. I follow the money where the money is going. You guys know with the tumor or with the fundamental or with COVID-19, there were a lot of opportunities when it comes to Nasdaq trading, because that was the moment where Nasdaq formed a typical double bottom, and from then it was just a bullish trend, That was the highest time I made money on indices, because with that bullish trend, the market would just go up, retrace a bit, I pump in more positions. After about 4 to 5 days, the market will retrace again. I pump in more buy positions. After about 4, I'd held that trade for almost about a month. And by the time I was closing that trade on Nasdaq, I made more than $38,000. That was on Nasdaq. That wasn't even a Forex pair. That wasn't even a commodity. That was indices. A totally different asset. And someone will tell you, I don't trade indices, I don't trade Forex, I only just stick to this. Bro, that is the quickest way on you just being depressed, not knowing how to follow the money how to follow the money and go to where the money is going. So this is a key concept that was able to change my idea, that was able to change the way I view Forex, that was able to change the way I even make money in Forex trading. Because bro, I have a couple of, that's why it even boils down to even strategies. I have different strategies for different market conditions for different assets. I have fundamental strategies, meaning if I want to trade my news trading strategy, if I want to trade the news based on what the market has given to me, I trade what I see, not what I want the market to show me. That is very, very important. Trade what you see, not what you want the market to show you. Very, very important. So that's why you'll be able to see I have my fundamental strategies. Meaning if I open my computer today and I see a good fundamental setup that is coming in like NFP and CPI, there's no way I can ever miss those two fundamentals. That's why in one trading day alone, you guys saw the video I made recently. If you didn't watch that video, go and watch that video. How I made $40,000 in one trading day together with my VIP members. Everything I shared, the video was the most transparent video you will ever see on the internet, because every trade I took on that account was the same trade I sent to my VIP community. Meaning as I was pressing buy, they were pressing buy, and I made $40,000. I'm just going to leave the link of that video up here. Just click the link above to watch that particular video if you haven't watched that video, to see the importance of knowing how to diversify your portfolio. I brought a new trading strategy on the internet, which was the straddle strategy. It went viral. But unfortunately that day I didn't even use the straddle strategy. Though it was news trading day, but I didn't use the straddle strategy. I didn't use the news trading strategy. I used a technical strategy because I found out that the market was getting to key levels. And with my technical strategies, if I get in with a risk to reward or 1:3 sometimes, I can easily capitalize on that. And that was what happened. That is the importance of following the money where the money is going. That was where the money was. I could see on the chart that this is where the money was. This is what I need to do to be able to capitalize on this trade. And I did just the same thing. Can you guys see the importance of not putting your eggs in one basket? The importance of not just sticking to one currency pair. The importance of not just sticking to one asset. Learn different assets and learn the way they move. You can just see even from what Aton Cross said. He said for the first 2 years, not even for the first 2 months or 2 weeks, for the first 2 years, learn everything that moves. Learn everything that produces a candlestick. That's the best advice I can give you. For your first 2 years of learning how to trade, learn everything that produces a candlestick. Learn everything that produces a tick in the market. Learn about stocks. Learn about Forex. Learn about indices. Learn about commodities. Learn about precious metals. And then by learning all these particular different assets, you'll be able to find the one which suits your style of trading, which suits your personality as an individual. And when you're able to pick those few that suit your personality as an individual, then that would be like your aha moment. Your aha moment is when you found something like, oh, damn, so within these 2 years, I've been looking, now this is what is working for me. Have an idea. With the first 2 years of you learning how to trade, learn everything that produces candlesticks. Learn different market. So that if this market is quiet, if this market is not having liquidity, if this market doesn't have participants anymore, you can go and trade this market. If the Forex market doesn't have participants anymore or is slow, it's always going to have participants, but it might just slow, the liquidity can be low. You go to indices. If the indices market doesn't have participants, it might just be slow, and you'll be able to know if the participants are there or not from the liquidity. If the liquidity is slow, you go to what? You go to commodities. If commodities is slow, you come back to Forex. You have an idea. Most of those strategies that you use on Forex work on those other assets. You just need to know how to tweak them a little bit. This concept was one of the highest concepts that changed the way I trade. That changed the way I see Forex entirely. By knowing that this market, in Forex trading, you propose, but the market is going to dispose. As simple as that. You're going to propose, but the market will dispose. The market will be able to teach you that, bro, in this market, you trade what you see, not what you want me to show you. That's what the Forex market will tell you. That listing. Here, if you are coming to trade in this market, you are going to trade what I'm going to tell you to trade, not what you think the market is going to do. So you trade what you see, not what you want the market to do. So I hope you guys have gotten some values from this particular video, and the takeaways from these videos are simple. Don't put all your eggs in one basket. Don't stick on one currency pair. Don't stick on one market. Don't stick on one asset. Another takeaway, for the first 2 years of you learning how to trade, learn other markets. Learn all the other markets you can think. Learn how indices work. Learn the fundamental. One of the main reasons why I don't trade synthetic indices or synthetic whatsoever is because up to now, I haven't understood what actually pushed that market. I want to be able to trade I only trade something that makes sense to me. If I'm trading Great Britain Pound USD, I know that, okay, these are two economies and fundamentally, this is what can be pushing the market to go up. Beside the technicals, I have an idea on what can be pushing the market fundamentally, because remember, occasionally I do have swing positions, meaning I need to be certain and know within me that this is what is going to be pushing this market within a considerable period of time. Just 2 days ago, we had CPI and it was negative for the United States dollar. Negative for the United States dollar, it means if I'm trading something like USD JPY and I'm on a sell position and I'm holding it for the next 2 weeks, I'm going to be very, very confident. Because fundamentally, I can already see that a CPI was already negative for this particular currency pair. And if I'm trading something like Great Britain Pound USD, I'll be very comfortable to hold a buy for even up to 2 weeks, because I'm very, very comfortable that it's a fundamental that is telling me that the United States dollar is weak. And since the United States dollar is a secondary currency or the quote currency on Great Britain Pound USD, I'm very confident Great Britain Pound USD is going to be buying for the next 2 weeks. And you guys will see it. Great Britain Pound USD, there's a high probability it's going to be buying for the next 2 weeks. SAU USD, gold is going to be buying for the next 2 weeks. USD JPY is going to be selling for the next 2 weeks. USD CAD is going to be selling for the next 2 weeks. Remember, trading is a game of probability, and I'm 80% very, very sure, or I have a high probability that this is what is going to happen on these currency pairs. And you guys are going to see. I'm not talking about you going to the 5-minute time frame. No, drop it on the 4-hour time frame and watch what happens within a period of 2 to 3 weeks. That is the importance of understanding what moves a particular market. That is the importance of understanding how to follow the money where the money is going. Because as soon as these currency pairs are going up, I'm going to be following it, bro. I'm going to have swing positions. I'm going to follow it wheresoever the market is going, wheresoever the money is going. So take these takeaways from this particular video and don't put all your eggs in one basket. Don't follow all these gurus, all these keep telling you to trade just a Great Britain Pound, JPY, USDGs, all the ZAD. No, that's not the way to go. You guys can hear from a legend who has traded for a bank, for Goldman Sachs. Go and do research on Goldman Sachs. You guys could hear from a legend who has made more than $50 million trading for a bank. And he can already know why all retail traders will go through the 90-90-90 rule. What does the 90-90-90 rule state? It states that 90 traders and 90% of all retail Forex traders lost 90% of their trading capital in the first 90 days of trading. That rule applies to almost 100% of everyone. I went through that I was in that same rule. That same rule applied to me. I lost 90% of my trading capital in the first 90 days of trading. So please, these are just takeaways I want you guys to take, because I don't want you guys to keep going through this circle. There's enough money in Forex trading, and the only thing which is that is stopping you from taking your own share of the $6.6 trillion transaction in the Forex market is just your ability not to be able to know who to follow, or the fact that you are taking information or ideas from places you are not supposed to be taking. So I hope this video gives you a lot of value, and if it has given you a lot of value, make sure you leave a thumb up on the video. Let me know in the comment section if you have any question, and I will do my best to answer. If you want me to mentor you one-on-one, just as I was mentored with one of the best in the game, I'm fortunate enough to be able to also have Godlove University, where I'm able to mentor other people on how to trade from A to Z. So if you want me to mentor you one-on-one, make sure you check the link below to enroll in Godlove University, and you'll be joining more than 5,000 other students who are learning and making money on a daily basis. If you want to use my recommended brokers, my recommended pro firms, or if you want to join my VIP Telegram community, check the link on the video description. And if you want to also use Paytrex Pro, which is the most viral and the most profitable Forex robot now, also check the link on the video description. Check out this video, which was another video I did earlier, explaining most of these concepts. Also check out this playlist, which is a playlist of all the videos I've already arranged for you guys. Click here to subscribe to the channel if you haven't done so, and I'll see you guys on the next videos. Peace.